Hello, this is Pat Walker at MissionWinners.com. I'm making a training coaching video on charts, chart analysis. You've heard me say countless times we prefer longer bases. There's a reason why. One of my degrees is in psychology. Charts are a reflection of human emotion. They're a reflection of fear, greed, complacency, panic. And it's reflected, as I stated, in the charts. Think about this. Each one of these price bars is reflecting people's thoughts. Rational thoughts, sometimes emotional thoughts. But I'd like to show you a great study right here. I'm going to do it. We're going to start here. This is Roku from this year. Roku runs up and then it pulls back. This selling in here is what? More sellers than buyers. If a stock's going down in price, what does it mean? There's more sellers than buyers. But now look at this. It slowly starts to turn a corner and it's moving up a bit in price. What does that indicate? The sellers are gone and any buyers should push it up in price. And they did. This is a daily chart. But this is why I love to look at daily and weekly charts. Here's the daily again. Here's the weekly. Again, remember this. Charts are a reflection of human emotions. Fear, greed, panic, complacency. Weekly. It pushes through. Well, we'll even go back to here. And patterns repeat itself. Look at this. Roku lifts up. Do you think there were people that bought the stock here and here and here and here? Well, yeah, it was going up in price. Do you think there were people that bought the stock up here? Well, yes, there was. Do you think that some of the people that bought the stock here, up here, watched it go all the way back down to here? Yes. Do you think there were people that bought it here that watched it go up and come all the way back down to here? And we're like, holy cow, I just gave back a ton of money. Of course there are. We've been those people. We know what it's like. Charts, again, are a reflection of the emotions, fear and greed and complacency, sometimes anger. So there's people that bought it here, and then it goes all the way down to here. And then it slowly starts coming back up near their price. And what do they say? Thank heaven it's near my price, I'm selling. That usually leads to a cup and a handle formation. You got a little one right here, a small handle. Then it starts to take off again. And then it starts to drop. Now, think this through. Are there people that bought the stock down here and watched it go all the way up to here and all the way down to here and they didn't sell? Of course there are. Of course. And do you think those people that didn't sell, and then there were buyers in here too, they watched it go all the way back up here, and then what do they say? Let's suppose you bought a stock at 55 bucks a share and you watched it drop to 30. The next time it gets near 55, what do you think? Thank God I'm back to my price. I can sell. I can sell. I can protect my ego. Well, we lose the ego, okay? That gets in the way of clear decision making. The stock goes up and then it starts to drop. Who's selling here? People that bought it here and watched it go to here and go back up and didn't sell. People that bought it breaking through these tops right here and watched it go up and say, hey, that's a decent profit. I'm going to take it. And again, what happens? More sellers than buyers. And what does it do? It drops in price. But then what happens next? After it drops in price, it turns and starts going back up. Look at the volume bars here. What does this indicate? More buyers than sellers. Green bars moving up in price, a function of supply and demand. And now look at this, folks. It goes up here and then it drops on heavy volume. What does that indicate? Sellers. Who's selling? Who's selling up here? Think about this. Are there people that bought the stock up here and watched that sucker go from 70 down to 30 and didn't sell? Yeah, of course there are. I ain't selling. and then it comes back up near their price. And what do they think? Thank God I'm near my price. I'm getting out. I'm selling. And it starts to drop again. That's called a cup and a handle formation. It's a reflection of human emotions. Are there people that bought it down here and watched it come all the way back up near old highs and say, boy, there's sellers up there because there were before, right? You can say, how can you say that, Pat? How do I know there were sellers up here? Because the price was falling. There was more selling than buying. Runs back up near that old high. The people that didn't sell here and watched it drop to here and come back near their price, what do they say? Thank God I can get out. Good, good. People that bought it down here and watched it go back up to those old highs say, I got a good profit. I'm taking it. I'm taking it. And then it goes sideways and drops. And then finally, it forms a handle here. This little handle with the volume on this bar, and this bar gets rid of sellers. It gets rid of sellers that bought it here. It gets rid of sellers that bought it here. When all the sellers are gone, what happens? Think about this. And I know I'm going a little long here, but again, this is important. Charts are a reflection of human emotion. Fear and greed, complacency, and panic. People want to protect their egos more than their pocketbooks. People bought it here, they watched it drop to here, it comes back near their price, and they go, I'm out. Thank God I walked away for nothing, for no loss. And then it sells down just a bit. This is just a little bit more selling and buying. Once the sellers are gone, all the sellers are gone, what happens? This happens. It breaks out on heavy volume, and it starts to make the march. Is that beautiful? Is that great? I'm going to refresh something on this. Bear with me. There we go. And look at the volume surges. It lifted off. Please remember this. It's a game, and that sounds corny and cliche and cute, and I don't mean this way. This is literally a game of tactics of buying and selling. And it's humans doing this, and they have emotions. And I know this for a fact. Many of you that are listening know exactly what I'm talking about. Hey, this thing's back near my price. I'm selling. I know. I'm the same too. We're all human. Let's forget about protecting our emotions. Let's protect our pocketbook and run it like a business. And off to the races. And this has been good for us. You can see it time and again in so many different charts. Anyway, I wanted to share that with you. Charts are a reflection of human emotions. When we accept that as a fact, and it is, then we have a better understanding of what to look for in chart patterns. And what do we like? We like, I'm going to go to the daily here. We like longer bases where it gets time to get rid of the sellers. That's what we look for. We like longer a base right here, but better yet, down here where it can get rid of the last of the sellers. I'll show you this one. There were people that bought this stock here and watched it go all the way up here, and they sold it. And it dropped. But were there buyers up here that didn't sell? Of course. They bought it at 36 and they watched it drop down to 30 and they go, geez, what's going on here? Then it rallies up and it drops. Who's selling here? People that say, I bought that sucker here and I watched it go down to here and by God, it's near my price, I'm selling. When you get rid of the last of the sellers, any buyers push it up in price. And that is what we're looking for. Function of supply and demand. There's a lot of experience in this video. I hope this helps you. That's my goal. A lot of people don't talk about this in this way, and I think it's so important. To know that 2 + 2 = 4 is knowledge. To know that 2 + 2 = 4, why it does, that is knowledge that's transferable to other situations. And that allows you to be and have the power. Anyway, I just wanted to share that with you. I hope it helps you. I hope it helps you. If you have any questions on this, let me know. I'm here, and I thank you.